Hello everyone, welcome back. Today we're going to be talking about the financial revolt that's going on in the financial industry, which we typically refer to as Wall Street, but we're really talking about the entire industry. And it revolves around a company, or rather the stock of a company, a gaming company called GameStop, which by itself really doesn't amount to much, but it has far-reaching implications, leading us towards a national collapse, which is where we're going to come back to. Okay, so first let's talk a little bit about buying and selling stocks. When people think of the stock market, they're usually talking about buying a stock with the purpose of selling it later on at a higher price. Okay, so the normal way that people typically approach the stock market, they want to get in, they want to buy, right? That's on this idea, buy a stock. Let's say that you buy $10,000 worth of a stock, and then basically the price increases, and then your $10,000 investment turns into a $15,000 investment, then maybe goes up to $20,000, and then you sell it, right? So let's say it goes up to $20,000, you sell it. All of a sudden, you doubled your money, right? So you bought it $10,000, you sold it $20,000, you made a $10,000 profit. Okay. Now, stock market's going both ways. You could have a situation where after you buy it, right? Let's say you make a $10,000 investment, it starts losing value, so it goes down to $8,000. Okay, great. Now you're losing $2,000. It continues to go down to $5,000. Great. Now you've lost half the value. You might decide to get out at that point, in which case you've lost $5,000 because if you sell at $5,000, you bought at $10,000, you sold at $5,000, you take home $5,000 of your initial $10,000 investment. If you decide to stay in and the stock continues to go down, right? Let's say the worst thing that can happen is it can go down to a zero value. Okay, so your $10,000 investment goes down to zero. Company's out of business. You lost your $10,000 investment. Okay, you're never going to lose more than the $10,000 that you invested in the company. Okay, so that's the conventional way that normally people participate in the stock market. They're buying a stock with the hope that it's going to go up. Okay, now institutions, on the other hand, they make money both ways, where it goes up or it goes down. In fact, in many cases, they make more money when stocks are going down, okay? And the reason for that is, right, if you think about that for a second, let's say I'm talking to you guys and I'm telling you, hey, listen, I got this company, let's say Toys R Us, right? Toys R Us, great company, its financials are coming out, it's gonna do well, it's gonna make more money in the future. And I'm telling you how great the company is. You're really not in a rush to jump into this, right? There's really no pressure on you. You can take your time. You can go invest. You can go investigate on your own, do your own research. Okay, but let's look at the opposite, right? Let's say you already own Toys R Us, right? And I come to you and I'm like, listen, man, the company's not doing very well. Sales are down. The stores are looking pretty empty. People aren't going out. Now there's a lot more pressure on you to get out, right? So if you went into Toys R Us, you bought it at $10,000, you're getting a lot of information, right, that the company is not doing well, all right? You're going to want to get out. So let's say you bought it at $10,000, the stock is now at your total investment is now at $8,000. You're hearing that the company's not doing so well. There's a lot of pressure. You get out at $8,000 before the value of your investment goes down to $5,000 or zero. Okay, so given everything I just told you, there's a lot less pressure, right, for you to buy something that you don't own, right, versus if you already own something and it's not doing so well, there's a lot more pressure for you to get out. You're going to feel a lot more pressure. Okay, so that's one of the ways that financial institutions make a lot of money. Okay, they make money by creating pressure for people to get out of the market. So let's talk about short selling for a second. So before I said you can buy a stock and then hopefully you sell it at a higher price. Well, you can also do the opposite. You can sell a stock with the hopes of buying it later on at a lower price. Okay, so I don't own a stock. Let's say let's go back to Toys R Us, right? I can sell $10,000 worth of stock. Right? I don't own it. I'm selling it. So now that I've sold it, at some point I gotta go back and buy it at a cheaper price. So if I sold it at $10,000, now I gotta go back. Hopefully I can try and buy it back at $8,000, or better yet, at $5,000. Right? And then another way to look at this, right? Let's say you come to me and you tell me that you're interested in buying a 1990 Corvette. All right, you want to buy this 1990 Corvette, and I tell you that, hey, listen, I can get you this Corvette. It's going to cost you $10,000, but I can get it for you. So you give me the $10,000, right? I don't own the Corvette yet, but I know where I can go get it. So I take your money. I've already sold to you. So now I go out and I got to try and buy this Corvette. So I know a guy that has this Corvette. I heard that he was interested in selling it. I go to him and I buy it from him for $8,000. So I buy it for $8,000. You already gave me $10,000. All right. So now I have a $2,000 profit. But what happens if I go to this guy, right, who I thought was going to be willing to sell me this Corvette for $8,000, and he tells me, you know what, he's not letting it go for less than $12,000. So, oh crap, I have a contract with you now, right? I have to deliver to you a Corvette because you already paid me for it. So I got no choice. This is the only guy I know with a Corvette. I pay him $12,000 and I deliver the Corvette to you. So I paid $12,000 for the Corvette that I sold to you for $10,000. Okay. So that's short selling. You're selling something in advance of you actually purchasing it. Another typical way that you guys will see this is, let's say I'm a roofer, right? And I go and I look at a job, okay, and I know from my experience that this job is going to cost, let's say, $2,000. Okay, I didn't actually go and price out the materials. It's just that I've done it enough times. I bought similar materials last week. I feel that I know what this job is going to cost me in materials, so I just throw out a price at you, whatever, let's say $2,000. All right, and then I go to the hardware store, I buy the material. Let's say I expect I can get all that material for $1,000. Great, I made $1,000 profit. But let's say I throw this price at you, $2,000. We make a contract, you give me the deposit. I go to the store, and all of a sudden there's now a price increase, right? Just because there's some shortage of materials or whatever. So now these materials that I thought I was going to pay only $1,000 for, now I got to pay $3,000 for these materials, right? Well, now I'm because I already have a contract with you, okay? So I gave you a price. Now I go to buy the materials. The materials are a lot more expensive than I thought they were going to be. I'm going to take a loss. So that's what short selling is, okay? You're going to sell something in advance of owning it, okay? So with this example over here, going back to the Toys R Us example, we're going to sell a stock for $10,000. We don't own it yet. And the goal here is that we're going to buy it at a cheaper price. We're going to buy it, let's say, at $8,000. We can buy it at $8,000. We got a $2,000 profit. But let's say we're wrong, right? Let's say the price starts going up, okay? So on the upside, there's no limit to how high this price can go. So let's say I sell it at $10,000. I'm thinking that it's going to drop down. Next thing I know, the thing's up to $15,000, right? So it's gone in the opposite direction I was expecting. So at this point, I'm already losing $5,000. Now all of a sudden, a few days later, it goes up to $20,000, right? So now I'm out $10,000 already, right? If I jump in the market and buy it back at this point, right? If I buy it now, I sold it at 10. I'm buying it at 20. I have a $10,000 loss, but it doesn't stop there, because this price can go all the way up to $40,000 or even higher. So if I sell this in advance for $10,000, and then the market goes up, and basically I buy it back at $40,000, right? Now I have a $30,000 loss. So my loss is 3 times my initial investment. Okay, so when you're buying, when you're buying and selling, the most amount of money that you can lose is your initial investment. Okay, so if you buy $10,000, worst case scenario, it goes down to zero. You lost your $10,000 investment. But if you sell, right, and then market goes against you, there's no limit. This thing can go up to $100,000. In which case you've now lost $90,000, right? So that's the reason why short sellers, when they essentially make a bet, right? They always put in what's called a stop loss. Okay, the stop loss is an automatic sell. So I'm buying a stock, let's say Toys R Us, or rather I'm selling a stock for $10,000. Okay, I'm hoping I'm going to buy it back cheaper, but instead of it going down in value, it starts going up. Well, I put in a stop loss at, let's say, $12,000. So if the price of this stock, right, starts going up when I wanted it to go down, there's an order with my broker that as soon as this hits $12,000, they're going to automatically sell it. I'm going to take a $2,000 loss, and that's it. There's no chance that it's going to go a lot higher up. Okay, so that's the stop loss, and short sellers always use this stop loss so that they can limit the amount of money that they can possibly lose. Now, let's talk about what happened with this company GameStop, right? Okay, so the company wasn't doing very well. The financial institutions basically started shorting the company, right? So they were selling it, they were short selling it, right? They didn't own the shares. They were selling it with the intention of buying it back cheaper later on. But here's what happened. They oversold it, okay? They sold more shares than the company had put into circulation. So if you oversell something, what's going to happen? That's going to create a huge demand. Okay, so what happened was a lot of people, small-time investors, right, what we call retail investors, they picked up on this. They realized that this stock had been oversold. They had sold more shares of it than there were numbers of shares in circulation. So what people started doing, right, they started buying it. And what happened is, as people were buying it, the stop losses were being tripped. So as the price of the stock started going up for GameStop, it would go up, it would hit a stop loss, and then that would trigger buying, right? Because once something's been sold, price goes up, stop loss gets tripped, right? And then now what happens is it's in this case it's automatic. It has to be bought back, right? So because you pre-sold it, now it hits stop loss, now you got to buy it back. So that creates buying pressure. So that pushes the price even higher. So then, as it goes higher up, it trips somebody else's stop loss, and that's what caused the price of GameStop to keep going up higher and higher and higher. And I think it was last Friday. It cost the financial industry about $90 billion. Okay, on stock that really had no value to begin with. It cost them $90 billion. So that by itself is not a big deal, right? The big deal here is what happens. A lot of these, I think the name of the company was Robinhood, which is a trading company, because they had relationships with a lot of these big brokerage houses. What they did is they halted the buying of this stock, GameStop. Okay. So not only did they halt it, they didn't stop stop the selling. They just stopped the buying. Okay, so what happened is as people were buying this stock, okay, by stopping the amount of people, by stopping people from buying it and only allowing companies to sell it, it now created a selling pressure. So essentially, they were trying to crash the stock. Okay, so. This is like a really big deal, okay? Because now the stock market to some extent is a gambling game, right? But you're changing the gambling rules in the middle of the game, okay, to benefit certain people. So this is why this is now it's creating a lot of what's the word I'm looking for? A loss of confidence in the stock market, in our financial industry, because there's certain rules in place that everybody is expected to follow, and by changing the rules in the middle of the game to benefit the big financial institutions at the expense of the little guy, right? That's a major problem. Now, add to that, okay, the Biden's Treasury Secretary, I think her name is Janet Yellen. She received last year, I think, $800,000 from Citadel, which is one of these big financial institutions that's involved with this. And essentially, what that is, right? The way it's being interpreted is, that was a payment in advance, suspecting that at one day, if Biden won, she would be, get into a financial position. That was a bribe in advance, or a gamble in advance of her, getting into a powerful financial position, which they anticipate. It was kind of known, I guess, within the Democrat Party that if Biden won, she was going to become the Treasury Secretary. So these $800,000 speeches are a way to get money to her. Let's say the speech is only worth, let's say, whatever, $50,000, right? Let's say she's really important, she knows stuff. All right, she should be getting maybe $50,000. But by giving her $800,000, which is way beyond what the value of her speech would normally be, essentially they're bribing, they're paying her for something else, for future services. And we saw this with Hillary Clinton. About a year before she was going to run for president, she was giving speeches, and she was getting paid like $1 million a speech or something like that. Because again, these financial institutions were anticipating that in the near future she would get into a powerful financial position, and they were essentially buying influence in advance. Okay, so this whole debacle now with GameStop and the way that they tried to fix the market to benefit the large institutions is, like I was saying earlier, is creating a loss of confidence in the stock market. Everybody can kind of see how it's fixed to benefit the large institutions. And what this is doing is adding to things that are already in place. So over the last 20 years, let's say over the last 10 years, everybody knows for sure at this point, right? Where everybody has 100%, everybody's 100% sure that our foreign trade deals are bad for this country. Okay, so we're losing on our foreign trade. Trump was trying to fix that. They got him out of the way. So it's expected we're going to go back to losing on our trade deals again. So you can kind of get a black market. You can kind of X this out. Okay, so we're losing on trade. X that out. Okay, currency. Okay, at this point, everybody knows that every time they raise the debt ceiling, they're just printing money. Okay, maybe 20 years ago, 15 years ago, people believed that they were actually, borrowing money from somebody. But at this point in the game, everybody is aware that raising the debt ceiling is just printing money, which is diluting the value of our existing money. Okay, so everybody's onto it. Before everybody was onto it, yeah, maybe it had some value. Everybody knows now that they're printing money. X that out. Okay, no confidence in our currency system. Okay, our legal and judicial system. Okay, thanks to the illegal FISA warrants against President Trump, the entrapment of General Flynn. Okay, everybody knows that the FBI, our entire legal system, and our judicial system, right? Because the judge in the General Flynn case, he refused to dismiss that case, and also we saw how in the House they impeached Trump the second time, like within 2 hours without any evidence, and that's basically the pattern that we can, because basically leadership comes from the top. So if that's how they tried Trump, that's essentially how they're going to be trying the rest of us going forward. So at this point, there is absolutely no confidence in our law enforcement or our judicial system. X that out. Okay, elections. We all saw the videos of suitcases of ballots being pulled out from under tables. We know that in states like Pennsylvania, where you need a state constitutional amendment to change the voting system, that was ignored. So at this point, absolutely no confidence in our elections. Okay, financial system. That's what we're just talking about now. Okay, no confidence in that. Okay, we can all see now that the rules are benefiting the large financial institutions, and the second that they start losing and the people start winning, they change the rules mid-game. Okay, so that's out. Our military. Okay, for a long time I had confidence in our military. I lost a lot of confidence at the point where the military said that they did not want to get involved with protecting our southern border, right? Because they were getting involved with domestic affairs, but they have no problem sending an entire army to Washington D.C. to surround it, to protect it from American citizens, right? So you got a problem with protecting the southern border from foreign invasions, right? That's interfering with domestic issues, but they don't have a problem with basically occupying all of Washington D.C. So loss of confidence in our military. So what are we left with? You got a lot of any one of these things by themselves is really not enough to collapse the nation, but all these things together are leading up to a national collapse. Okay? So that's why this financial revolt that we're seeing happen with this GameStop stock is really significant. Okay, and a lot of people did this on purpose. They saw what was happening. They saw that that they had shorted the stock for a lot more shares than the company had even issued. So they knew that because the stock was oversold, that at some point there would be buying pressure. So a lot of people got into it to make a few dollars, but a lot of people just got in it just to stick it, to stick it to the man, basically. So the funny thing here is that people, the government, the Democrats, they were expecting a bunch of hillbillies to show up in Washington D.C. with pitchforks, right, and start, I don't know what, a war with them, okay? When in fact, people have found much more damaging ways to attack the system. They're attacking them financially, okay? And the interesting thing here is that, these financial institutions have been making a lot of money off of short selling for a very long time. Because remember what I told you earlier, if you own a stock and I give you bad information, I can create panic in you in such a way that, I can never create enough panic to make you go buy something, right? But I can create enough panic for you to go and sell something, okay? Within, as far as the stock market goes anyway. That's a game changer for them. They can never go back to making the money the way they've been making it in the past, short selling stocks, creating panic to get the price to drop even lower. And that's a huge chunk out of their ability to make money. This is a real game changer for the financial industry. So I hope you guys enjoyed this video. I know it was, it got into a lot of details, and a lot of these details are just still kind of unraveling. But this is something to watch. It's kind of funny. It's like we're not getting the revolution that we thought we were going to get, but we're getting a revolution somewhere else. Because remember, there's a lot of components. You got trade, currency, law and order. Law in the judicial system. You got elections. Financial system. Military systems, any one of these things going down by themselves is not enough to create, a total collapse. But all of these things, going down at once, or people losing confidence in everything at once, can have some pretty serious consequences. So let's continue to follow it. I'll continue to try to keep an eye on this stuff and report it to you guys. But let me know what you guys think in the comment section. If you're not a member, subscribe. I'll talk to you guys soon.